Good morning, everybody. Welcome to another iteration of Value Investors Edge Live. We're hosting D'Amico Shipping, Chief Financial Officer Carlos Balestra de Mottola. Good morning, Carlos. Thank you so much for joining us today.
Good morning, Jay, and thank you for having me today.
I want to talk big picture first with the product tanker market. Look, we're coming off a monumental 2022. How does this year, 2023, compare to that in the big picture?
Jay, I think it compares very well, actually. Yeah, it's true. 22 was very strong. Often, I think when we think about 22, we think about Q4 especially. Momentum built up throughout the year. So 22 wasn't as strong, especially in the beginning. So if we look at both Q1 and Q2 this year, we actually did better than last year. The spot averages on our vessels were better than those last year. And we also benefited from cover at higher average rates as some legacy contracts terminated gradually throughout the course of last year and this year. So the result of this was that our profits in the first half were of almost $100 million this year, relative to around 19 million last year.
Yeah, it's a good point because a lot of folks, they compare year over year, and we're looking at these rates in August and September, and they're a lot lower than they were last year. But of course, last year was the all-time highest rates in product tankers. But all that said, though, when I've looked back and I have looked at the August and September rates of the last 20 or 25 years, 2023 is quite strong. And the interesting part to me, Carlos, is that the rates increased in August and they increased further in September. And that's not typical, right? Normally, those are some of the two of the weakest months of the year. So why do you think the rates are kind of doing what they're doing? What's driving those factors as compared to like a normal year?
There was some factors which, despite a very healthy market overall, dampened a bit rates in the first half of this year, which are also linked to the strength of the markets in Q4. Some of these unwound, some of these factors, they created a very positive setup for the markets. And so we saw that refining margins overall are at very healthy levels now. Diesel in particular, which were quite weak to start off the year, they have picked up significantly. Fuel oil margins have been very strong and strengthening. So the overall margins have been very, very healthy. Inventories are again at very low levels, which is important. It leads to arbitrages opening up. And then something which we experienced this year, higher than usual congestion in Panama, in the Panama Canal because of the droughts, creating a further element of inefficiency in the market, which definitely helped. And then, of course, there was a very strong travel season this summer. There was some revenge traveling. Of course, Asia was a bit behind the curve in this respect, but with China finally opening up, we saw also much more traveling out of China, mainly domestically, but also internationally. And all of that helped the strong markets we saw this summer.
Yeah, those are great points. I mean, the strong underlying base demand and the return of the travelers and just, of course, all the dislocations. And, one other question I did want to ask, is there any desire to pursue an alternative listing, such as migrating over to the Oslo exchange or maybe even some sort of U.S. listing? Have you looked into that at all?
Yes, both these possibilities we have looked at. They are often mentioned in our meetings with investors. Yeah, we think there is some truth to that. I mean, probably the fact that we are in Milan does, rather than in Oslo or in New York, does affect us somehow. We don't think a dual listing would be beneficial for us because it would mean dividing the liquidity in two markets. We might not achieve our goal there. But what we are doing, which is not a substitute, but hopefully will help, is we have our shares are traded on the pink section of the OTC market, and we are now applying for membership of the OTCQX market. So hopefully that will provide an alternative for US investors to purchase our shares in US dollars during US trading hours.
Of course, the volumes are thin, but it does allow more American investors to participate. So that's exciting news. So looking forward to that. Yeah, excellent, Carlos. This was your first interview with us, a formal one. Hopefully it'll be the first of many to come, Carlos. Thanks again for joining.
Thank you, Jay.
Yeah, absolutely.